Get started. Hey everyone, this is I'm Steve Bomar. I'm with Berkshire Hathaway. I'm a real estate agent in the Montgomery County area, north of Houston, and I'm here today with my special guest, Gary Watchler, and he's with Rocket Mortgage. And we're going to be talking about the mortgage process and why you want to get pre-approved and things like that. And so I was going to ask, first question I want to ask you, really, what does a mortgage officer do?
Well, my job as a loan officer is to help somebody who needs to buy a home, get them into the correct program, make sure it's best for them, and make sure that they qualify up front so that when you as an agent go to show them a home, we already have all of that settled and there's no need to worry about the financing part.
Hmm, okay. Okay, that's a good answer. And then the next thing I want to talk about is I always talk to my clients about getting pre-approved, but they never
Mhm.
seem to want to do that. So why is it so important for a client or buyer to get pre-approved before they buy a house?
Well, one of the neat things about being pre-approved, and there's two different things. You can do pre-qualified and pre-approval, right? So a pre-qualification is when a customer calls me in and I don't really verify any of the stuff they tell me, but I look at their credit report and then I approve their qualify their loan based on what they told me. When we go to the next step, we do what is called a pre-approval. I then collect their documents, the pay stubs, the W-2s, bank statements, FIDI tax returns, and so forth. Then we underwrite the file like we would if they'd have a home. So that way, when they find a home, we're looking at a 15-day closing because everything's already done. All we need is the appraisal and title work.
Okay. And so how long does the appraisal usually take? I mean, it's different.
Right now, the appraisal is usually taking us about 5 days. VA is a little bit longer. VA is around 7, but the appraisals aren't a problem at all right now. So that's why I'm saying if you've already done your pre-approval, did all the steps, closing can happen pretty quick.
Okay. Cool. And then I know that credit reports and interest rates, they have an impact on each other. How does that work?
Well, the credit report's always going to be based on the individual, and it's based on how they pay their bills. It's based on the amount of credit they have outstanding as opposed to what's open. And that's going to fluctuate anywhere from 620, which is usually going to be the minimum, up to the high 700s.
Mhm.
Obviously, the better your credit score is, the better your programs are going to be, and the better your interest rate's going to be.
Okay. Do y'all guys have a way to improve someone's credit score?
We absolutely do. So for agents, if we've got a buyer who doesn't currently qualify to buy the house and they score a 559 or higher, we will actually help them in assisting getting them to getting their credit fixed or above that mark so that they can buy a house down the road. And we do it at no charge. It's
Mhm.
just to help them to get into a home in the future.
Okay. And then down payments and closing costs. How much do people
So
need for a down payment?
down payment can go as little as 1% down. We have a special program that we use where we give the buyers a 2% gift of equity so we can go down 1%. You can do a 3% down payment. Conventional, you can go 3.5 FHA. And then you can put anything you want down up to whatever you want to put.
Mhm.
You always want to make sure that anything less than 20%, you're going to have mortgage insurance.
Right.
On an FHA loan, that sticks with you a little bit longer, but on a conventional, once you get to 78% loan to value, that insurance will drop off.
Okay. So what does that insurance do?
It insures the lender in case of a default. So the
Okay.
insurance is not for the customer, it's for the lender because of the loan to value. The customer would ever default, they're then recoup that fee to help not take a complete loss on the mortgage.
Okay. Now you mentioned FHA and there's VA and there's USDA. What other type of, and there's conventional loan types, and
Mhm.
so those are different type of loans that you can get.
Correct.
Yeah.
So conventional, you're going to have a minimum of 1% down using one of our programs.
Mhm.
Usually looking 3 to 5%, anywhere up to 20. FHA, we can go 3.5% down, and usually if you go FHA, you don't want to put more than 3.5% down. It just doesn't make sense monetarily. Um, USDA is based on an area. It's a rural program with 25,000 or less people within a vicinity, but that is a zero down payment program, but it is income based and credit based. So
Okay.
everybody's individual.
So that may be out in our area, maybe out near Anderson or Richmond.
Willis, New Caney,
Okay.
parts of Conroe,
Okay.
Montgomery.
Okay. So what you have some you talked about some other programs you have too besides you have the 1% down, but you also have something for people who are renting and
Yeah,
yeah.
Rocket has rolled out a couple new programs. We have one where if a buyer's rented for the last 5 months, we'll give them up to 10% of what they paid in rent to use towards buying a house. So we call that a rent rewards program. We talked about the 1% down. That is based on income also. Um, we also have rolled out a program where right now the rates are not rural friendly. So what we're going to do now, if a customer qualifies for FHAV or conventional, we're going to give them a 1% rate break for the first 12 months for free. As an example, I helped a veteran purchase a home on Saturday, and he was approved at 6.5% rate. That's what the VA rates are right now.
Mhm.
We were able to give him 5.5% for the first 12 months at no cost to him, just to give him a little bit of a break and a 12-month cushion. Hopefully the rates will drop for them and we can help them refinance.
Okay. So what if I need to sell my house, but I finally have someone to buy?
So we have what is called a quick buy program, and this is going to be based off every individual customer. But let's say that you've got a customer that has a home worth $300,000, you know, 100,000 on it, but they want to buy another one. So instead of doing a contingency offer, we will write a contract to purchase that home within 6 months at a certain price negotiated between the customer and us, and we will give them the cash to buy the next house so that it's not a contingency offer.
Okay.
Now, if the house doesn't sell within the 6 months, we'll buy it from them.
Hmm.
And what's neat about the program is that we do not have to then include their current house payment against them because we know it's going to be sold no matter what. Either the agent's going to sell it or we're going to buy it from them.
Okay.
So now they can buy a house. They have to make both payments, but now they can buy a house using the cash out of the equity before they sell it.
Right. Wow. It could
It's
be
a
really
great
tight for
program.
6 months. Yeah, it sounds
Great
great.
program. They'll go up to
Yeah.
75% loan to value. So you want to take a look at the house, multiply 75%, subtract the first mortgage, and whatever's left is that's your equity.
Okay. And so when somebody comes in and they are setting up a mortgage, and what are some of the challenges that they might want to watch out for?
Well, you want to watch out for debt ratios. You want to take a look at your debts based on income that's coming in. We got to make sure that we stay, in that 45 and under range. We want to make sure that our credit score is where it needs to be because that's real important. And then we have to make sure that the customer's a W-2, whether they get bonus income, whether they get overtime income, or they're self-employed. And do we need to look at tax returns? Or if tax returns don't work, can I look at a bank statement loan where I look at their bank statements for 12 months and use income that way?
Right.
So it covers all the bases, making sure that everything's done and there's no questions asked.
Right. Okay. I guess one of the things I've heard of people doing is they get their contract, they get everything going, and then they go buy a house, or they go buy a motorcycle or a big couch and finance it, and it impacts their payment
Yeah.
ratios.
What I try to tell all my customers when we're doing a mortgage from them is, as of the day we talk to the day we close, you get to buy nothing on credit.
Right.
Reason for that is I pull a credit report the day before closing. If that shows up that you made a purchase, then I've got to use that in your debt ratio, send it back to the underwriters, and sometimes depending on your purchase, it can throw you out of whack where you can't buy.
Right. Wow. That
Yes.
would not be good.
That's not
Yeah.
good.
Yeah.
That has happened.
So if someone wanted to buy a house in the next 6 to 12 months, what should they be doing?
Well, the first thing they want to do is get pre-approved. They want to call a loan officer like myself, get pre-approved, get that out of the way, make sure there's no issues. Because if there's some issues, that's going to give me 6 months to fix them.
Mm-hmm.
Okay. Remember that when we do a pre-approval or pre-qualification for a customer, we do a soft credit check. So we do not hurt their score by giving them a pre-qualification. But our goal is to make sure there's no issues, no problems with buying, so that when they're ready, we're ready.
Okay. And that sounds like a lot of good information. And then I know that I always talk to people about telling them they need to get pre-approved and then work with a mortgage person,
Yes.
a loan officer, and then you're in my office, so
Yes.
we try to work closely together. So as an agent, I'm trying to help you, provide you, the customer can help you get me a mortgage for my guys to buy a house. And so we work together as a team to help people buy that dream home.
Yep. Our goal is to make it as easy as possible and to enjoy the process.
Yeah.
Nothing worse about buying a house when it's not fun.
That's
So it
right.
goes to
Yeah.
help make it fun and make it enjoyable.
Yeah. Okay. Well, Gary, I just want to thank you for talking to me today, and
Absolutely.
we'll get back together some other time. We'll
Talk to
talk
you
to you later.
soon.
Thanks.
Thanks, sir.
Bye.
Bye-bye.